March 8th, 5 weeks ago, I predicted that Nvda was likely to fall lower and that it would take the whole stock market down with it. This week, I'm going to highlight why I knew that was likely to happen and show you how to do that for other hot stocks. And then give you some thoughts on what is next for Nvda and the stock market in general. We'll look at the overall markets, stocks, commodities, and crypto, and I will look at the trade of the week on TWG. So in the March 11th edition of this weekly video, and make sure you're subscribed so you can get these videos each week, I talked about Nvda and the fact that it was making what I call a bursting bubble candle. What is a bursting bubble? Well, that's when the stock goes up very quickly, goes parabolic to the upside, hits a new high, closes below the open on strong volume. I'll show this for you on a chart in a moment. And it's a very reliable signal for very hot stocks as they make their highs and then ultimately correct lower. Now, it took a while. It's taken 5 weeks, but of course, last week, Nvda had a pretty rough go of things, and it's dragged down the S&P, the Nasdaq, with it because of its heavy weighting in those indexes and the effect that it has on psychology. When a stock like that is falling, you get a lot of other stocks that fall as well. So what is the signal? Well, again, stocks tend to trend in linear trends. So you can draw a straight line along the bottom, but eventually when they get the madness of crowds kicking in, they will go parabolic to the upside. I'm going to show you this on a chart in just a moment. Now, the next sort of thing that we look for is it hits a new high, which I call a bursting bubble pattern, and closes below its open that day. Now, the other confirmation that I thought was interesting as we look at the chart here is that the comments in that for that week's video were basically saying I was wrong, and there was just widespread bullishness. In other words, everyone was in love with Nvda, and that is also a sign of a top. When psychology is so positive to one side or so negative to one side, but when it's very one-sided, the general outlook for a stock or market, that's usually near the top. So here is the chart of Nvda, and you can see that I've drawn a trend that goes from fairly flat over here, and then it gets steeper and steeper until it goes parabolic. And that's what I mean, is that the curving of the chart is like that. And then we have the bursting bubble candle right here, hits a new high, closes below its open. So that's the sign of a top, and that's when we did the video on March 8th. Then the stock made a falling top, so this high is lower than this high, and it then broke its upward trend line. There's all these signals of weakness before the stock starts to actually accelerate to the downside. And then, of course, on Friday, I think it was down about 10%. So where is it headed? Well, the answer to that can be seen in the longer-term chart of Nvda. Here is the long-term linear trend line, something like that. And it could be a little bit more like this or like this, but roughly like that. And when markets run away from trend lines, they usually come back to trend lines. Now, they can come back by going down very quickly, or they can come back by going sideways for a longer period. So my guess is we're probably headed towards anywhere from 570 if it goes down really fast to maybe 650 if it takes longer, because of course over time this trend line continues to rise. But that's probably the downside, and at that point this stock will probably find a base and start to turn up again. You know, it's a good company. They make lots of money. People love their products. It's not a case of the company having a problem. It's the fact that the price that investors were paying for the company got too high. And that happens because of emotion, because people get excited and they have the fear of missing out and they push stocks higher. And Nvidia is just one example. We can look at examples throughout history of this happening over and over again. You know, when I day trade stocks, we get this on an intraday basis where you have, you know, these pump and dump penny stocks, which I love to trade, by the way. They can go from 50 cents to $2 in one day, and then 2 days later, they're back at 50 cents again because they get pushed up on the madness of crowds, on very positive psychology. So watch for the bursting bubble signal because it's a real good sign that a stock is topping out. But be very careful. It's only worth looking for when a stock has made considerable gains, goes parabolic, and again, going back to the chart, it'll have very strong volume on the day that it hits the high, and you can see that there. All right, let's get into this week's market analysis. I'm going to jump into the Stockscores.com website. We're going to start with the chart of the SPY, which is the S&P 500, and you can see that the daily upward trend line has been broken a couple of weeks ago. That's when I lowered my rating, and the longer term 3-year chart is, pulling back, but we shouldn't overstate the weakness. Like, it is due for a little bit of a correction. Now, is it going to come all the way back down to this trend line? Certainly it could. It could pull back a little bit and then try to make a new high and fail, thus making a falling top. And, that wouldn't be that big of a surprise. I don't think we're going to get a lot more weakness in the short term. And the reason is we don't have the falling top on this chart yet. If you look back here, see how it made a falling top right here? And then we got, another 6 weeks of weakness out of that. So we had the upward trend broken, which is where we are kind of right now. It tried to make a new high, made a falling top, and then continued lower until it pulled back to that upward trend line. See how I've done that? It's point here. Those are your inflection points. You draw a line across them, and that's exactly where the market bottomed out. So could we pull back to that level? It seems quite far. It may take some time. It may not be until the fall, but certainly that is a reasonable expectation. I do think the market's getting a bit oversold in the short term, and so we may try to bounce back a little bit. This is our short-term 2-hour chart, or 30-minute chart, 10-day, 30-minute chart, and it is negative. Probably bounce back a little bit next week. Let's take a look at the NASDAQ 100, QQQ, and you can see here, that's where you're really getting the more of the parabolic move to the downside. If I draw a line across these tops, see how we're running down and away from the trend line? So just as stocks that are topping go parabolic to the upside, stocks that are gripped by fear, or markets that are gripped by fear, will often go parabolic to the downside, and then they bounce back a bit. That doesn't mean that it will break the downward trend. It's just oversold, and so it's probably going to bounce back a little bit in the short term. Now let's take a look at IWM, which is your small cap index. And it's not as bad, I think, because it didn't go up as much. It didn't have as far to fall. It is still weak, and so we want to be fairly careful. By the way, you can make money in markets like this, but you have to focus on trading alpha stocks. At the end of the video, I'll show you an example of that. So the market was down quite a bit on Friday, but yet there were still stocks going up. I've got an example of one of those that I'll show you at the end of the video. Let's take a look at the 3-year chart of IWM. And there you can see how it really hasn't participated in the strength like the large cap indexes, which were taken higher by stocks like Nvda and Microsoft, the AI craze with large cap stocks. And so it's coming into this support zone right here. Maybe one more bad week and then try to make a bounce. We'll watch for that. Onto the Canadian market, which hasn't done as poorly, and that's largely because it is heavily weighted in commodity stocks, which have been strong, and also gold and silver and oil. So those commodity stocks doing well. So it's got resistance there. Not a great surprise that it would get stuck there. Talked about this a few weeks ago, because the market remembers old highs. And so when markets or stocks rally into resistance, they usually get stuck at resistance. And if you go back a few weeks in these videos, you'll see that I talked about that then. Probably pull back a little more and then maybe come up and try to build a nice base before making the break higher. This is called a cup and handle pattern. We just need the handle. And the handle would be a sideways trading range on the right-hand side. If we get a breakout from that, then the Canadian market should outperform. All right, moving along, let's take a look at those commodities, gold and oil. So here's the gold chart, daily chart in a nice upward trend. It's taken a little bit of a break the last 5 or 6 days going sideways. We can see that if we look at the 1-month chart, there's a little sideways range there, but the momentum is still up, so that's a bullish market. On oil, it's had a little bit of weakness the last week or so, but it hasn't broken the upward trend line. In fact, it's pulled back down to the upward trend line. And so oil should bounce higher next week. Now, if instead it breaks down, then that would be a negative, and we have to, sort of lower our expectations for the oil market. But it ran away from the trend line, went parabolic. Look at that, bursting bubble candle, hit a new high, closed below its open. Volume was strong, 5 days later, we're down for those 5 days. Let's look at the US dollar. UUP is the symbol. And you can see here that the trend is up. If we look at the 1 month trend, it is up. So bullish on the US dollar. Bitcoin had its halving event. And ahead of that, everyone thought that Bitcoin was going to continue higher. But in fact, it has just gone sideways for the last little while. And the reason is it ran away from its trend line. So there's your linear trend line. You run up and away, parabolic. And you actually had a bursting bubble candle right there. See the very strong volume? Managed to go a little bit up, but that was kind of the topping point. And now I think it's just going to grind its way back down to this upward trend line where it should bounce and then hopefully continue that upward trend. But if instead it's building falling tops and breaks down through the upward trend line, then that's a big negative. So this would be a positive, but let's see what happens. I'll keep you updated here with these weekly videos. Make sure you're subscribed. You know, we're pushing towards 20,000. I'd love to get to 20,000 subscribers this week. So lots of you watching these videos are not subscribed. Why not subscribe? It's free, and you'll get updates when I put these videos up each week. All right, the last chart I want to look at is TLT. This is the bond market, and this is the reason that small cap stocks have underperformed because they're much more sensitive to interest rates. So you can see we're in a downward trend, falling tops, so that is negative. You can also see that we're quite oversold because we ran down and away from the trend line. And so we're at the bottom of a downward sloping channel. And so we should see the bond market move up in the next few weeks. And that would be supportive for those small cap stocks. I don't think it's going to be that big of a help for the large cap stocks because they never cared about rising interest rates. They kept going up while the bond market was going down. And so, I think it's more a case that this is going to affect the small cap stocks. So my ratings then, you can see for stock markets, I'm short-term bearish on all of them and long-term neutral. Gold, bullish on both time frames. Oil, neutral on both time frames. US dollar, bullish, short-term and long-term. Bitcoin is neutral on both time frames. And then bonds, bearish on both time frames. All right, so earlier in the video, I said that there is a way to make money from stocks on the buy side, even when the market is weak. And the way that we do that is looking for what I call alpha stocks. Alpha stocks are those that are trading on their own story, often cheaper stocks, lower price stocks. But what's key is to identify stocks that are trading with abnormal volume. They have captured the crowd, and those stocks can move up regardless of what the market is doing. So the way I look for these is I have an algorithm that we run every day in our Stockscores Active Live service, looking for stocks that are trading with price gains and abnormal volume. We look for statistically significant abnormal volume. We look through thousands of stocks using computers like the one that's behind me here and looking for that. And when we see it, we watch for certain setups using an indicator I have called an action candle. So how does that look? Well, this is a stock that was trading abnormally on Friday. It is a fairly new issue. I think it's only been trading for 3 or 4 days. You can see it's a lower price stock in that $2 range as of the start of the trading on Friday, but it got a lot higher through the day. But it's trading abnormal volume. All right, so that's my cue to watch it. Now, we have a few buy signals on this stock through the day. I have a strategy called early riser where we jump in these things early. It was right there. That was the first signal. But then you see here this action candle, this pink and yellow dot. That's my own indicator that I've programmed for trade stations. We call that an action candle. And that's breaking from the right kind of pattern. So it's not enough to have an action candle. You can see there's others. But we want action candles that are breaking from low volatility. And so that's what happened right there. And that was our first trade on this stock. Well, we had the first trade over here, but this one was the better setup, I guess, because of the action candle. It hit 9 times risk and gave a sell signal on a break of the upward trend line at about 6 to 7 times risk, right in there. So that means if you risked $100, the profit was, let's be pessimistic and say $600. If you risked $1,000, then it's a $6,000 profit. And I want to emphasize this. When I say risk $1,000, that isn't the position size you take, because we never hold a stock down to zero. It's the amount we're risking where the stock, will lose $100 and then we think about selling it. So this case, it made 6 times risk. Now the second trade of the day, again, an action candle right here. This is a strategy called an intraday pullback. And so if we just sort of do some basic technical analysis on this chart, I can draw a downward trend line. You can see the downward trend line broken. You can see rising bottoms building, and then you make an action candle right there. So that's another opportunity to buy the stock for a little run into the close for another 1.7 RR. So conservatively on this stock, 7-8 times risk on the day, on a day when the market was down. Alpha stocks, that's what you want to trade. That's a big part of what I teach. You can learn more about that at stockscores.com. Hope you've enjoyed this week's video. If so, click on the like button. Please subscribe. It's nice to see us get to 20,000 subscribers. Have a great week in the market and trade well.